Hey guys, what's going on? Um, we'll just give it a minute here. We can actually get started. I don't know how many people are coming. It's Friday. Can you guys just tell me if you can hear me? Either type it in the chat or just say something.
Yeah, Rob, we can hear you.
All right, perfect. How are you guys doing today?
Good.
Right on. So I think it's a pretty small group today, at least so far. Ask away, guys, whatever you want to talk about. And then if you miss anything, I'll throw this up on YouTube after.
Rob, so yeah, can I go first?
Absolutely, man.
Okay,
You can share a screen too, or annotate, whatever you want to do.
my first question is, yeah, I'll share my screen later, but my first question was regarding a couple of sessions ago you mentioned that, for example, if we're bearish on the 4 hour and the 15 minute, and basically when we're anticipating a pullback and you see a failure of like two supply zones, you can buy to like the next supply zone or the 50% to the premium, right?
Correct. So the theory is that you can, safely buy up to 50% of the impulse. Sometimes it's a little more, sometimes it's a little less, but yeah, that is the theory of how to manage a counter trend trade.
Okay. So now my question is regarding like the failures of the supply zone. So can I share my screen?
Yeah. Hold on. Let me stop sharing mine. And I think you should be able to share yours then.
It's disabled.
Hold on. Try again.
Yeah, I can share it now. So can you see my screen?
Not yet. Oh, yeah, there we go.
Okay, so this is a while ago. So I just decided to, just back test it for a bit. And my question was like, when you're looking for supply zones and reactions, right? So right here we got a flip. So I was looking to enter here. But
Yeah.
my question was, let's say I missed this entry and I'm looking for another entry. Like, would I consider this supply zone and then the failure of this supply zone and then I mark out the demand zone, or would I look from like to the left and mark out these supply zones and wait for a reaction off these ones?
So I look on the leg that's going up. So to me, like what took this out, and then since you didn't really have much of an interaction, you could kind of say something in here.
Yeah, exactly. Okay. So always like focus on the recent price action. Like you don't have to look at the
Yeah,
past.
that's what I do. What I will do though, like on the left, I'll look on like 10 to 30 and any major POI, like something's obviously in here that stalled price and caused this. I
Yeah.
will definitely make note of that so that I know where price is likely to stall. And at least, like if you're expecting price to stall somewhere in this area, you're not probably going to be looking for a buy anywhere in here. You're going to wait
Yeah.
till it comes back.
Okay, right. That makes sense.
Yeah, so
So
I kind of look at structure being broken the same as market structure. Like once you've broken one form of market structure, you just keep taking out, marking the highs. You keep taking out as you keep going. You don't keep looking left, right? But
okay, right.
you do look at to the left for where it's going to react. At least that's how I trade myself.
Okay. So just mark out like the like the
Supply
strongest,
zones,
yeah,
you
strongest
bet.
supply zone, and then focus on the recent price action.
Yeah, exactly. And
Okay.
then essentially you're basically looking where did our liquidation happen? So down here you liquidated all of this, you came
Yeah.
back, supply failed, so it's either here or the extreme. Ideally we obviously like this point to go, but that's not always the case. We always have two possibilities.
Right. Okay.
Yeah,
Yeah.
you betcha.
Yeah, so example would be like if I mark this out right here, so maybe like right here you see a failure of the supply zone, so I can buy from here to here, and then I see a change of character, and then I can sell from here all the way to this zone where I would enter again, basically.
Correct, but like I don't pull the 1 minute POI. Like so myself, I go and cycle through 10 to 30, and I probably pull either the 10 or the 30, whatever looks cleaner, and I'll pull the whole area and see how it reacts into it.
Okay.
If you start pulling every 1 minute supply and demand, it's easy to get lost, and
Right.
ultimately you're always looking to work off a higher time frame demand or supply. Like I don't use like a lot of people ask me if I use 5 minute. I don't, but a lot of the stuff I find on the 10 minute correlates with the fives anyway, because a lot of times 10 minute wicks are on the 5 minute anyway.
Right. Okay.
So yeah, that's how like everything I do is 4 hour and then 10 to 30. And aside from that, if I miss a trade because it went off a 3 minute supply, I'm okay with it till it hits another higher time frame POI, because at some point it will. Because obviously you got to think of it this way: the concept works because think of how many people only swing trade and don't use anything below a 15 minute. You know what I mean?
Yes.
So if that's how they trade, obviously the concept of waiting for a higher time frame POI works, and it actually gets you usually a better entry.
Yeah. Because as a retail trader, like even for me, I would focus on like the daily 4 hour and the 1 minute. I would never like switch through between like the 15 and 1 minute. So yeah, it makes sense.
Yeah, like myself. So like I run split screen, and the majority of the session I stare at the 15 minute. And then whenever it comes into my POI, I look at the reaction, how it reacts, how it interacts. And then I look at for my get-ins. I try not to sit there and stare at the 1 minute the whole time, because you will get lost in the chart. Like I even tell people, if you sat on the 1 minute too long, maybe just get off of it and just cycle through, 10, 15, just to get off of it, to get a wider view of what's going on. Because ultimately 1 minute is all just for entries. Like if you're just pulling structure off 1 minute and you're trying to formulate a trade, you won't win in the long run. I used to trade just 1 minute breaks of structure, and it was working so good until all of a sudden I hit like a 2 week losing streak, and then I had to go back and figure out why. And that's when I was like, okay, so you need to work off higher time frame POIs, and then it gets you on the right side of the market more often than not.
Right. Okay. Yeah, it makes sense. And my last question was, Rob, so I've been back testing and I've been trying to hedge as well. Like, how you're into trading like cash, like small hedging opportunities.
Yeah.
But most likely it hits my stop loss. So like, can you recommend like what to look for and like on what time frames?
So your hedge essentially, like for myself, like I'd look at this and I'd be like, this is kind of a range. I'm not really interested in touching anything in the middle. So if I am gonna hedge, I'd be selling from somewhere in here, buying from somewhere in here, and anything in the middle, no matter how juicy it looks, I just stay out of. You're always essentially looking to trade your edges. And if you get some kind of move where it came up here and wiped all of this liquidity and then goes down and causes a flip, hedge off the flip zone on what took out the demand. But again, you're following your premium and discount pricing, not to an exact T, but like just stay out of this whole middle area. It won't do you any favors. Like, yes, you'll miss trades, but you'll miss more losses than winners. Like if I hedge, it's got to be from an extreme. I don't know if you've seen my range post, but essentially the market does something like this, creates a bunch of equals, it does this, and then it'll create a bunch of equals, and then you'll see your ultimate move. So by always only working off the edges, you have a higher probability of your trade working out. Whereas if you stay out of this zone, that's like the only way I hedge myself. And the other way of thinking of hedging is, let's say 15 minutes bullish, for example, and you think it's going to reverse. Well, where are you going to hedge to? Probably one of your POIs where you want to take the buy from. But again, that hedge needs to come from somewhere up high if you're shorting, so that you can break even quick enough, right?
Yeah, exactly. Yeah.
The hedge needs to be at least a 5R. Like if you're only hedging to get a 2-3R, it's almost not worth the risk.
Okay. Makes sense. Because I was like, when I was backtesting, I did 1 to 4. Because personally, I like for me 1 to 4 is good enough.
Yeah, if you're okay with that and it's in your trade plan and it's profitable, stick to that.
Okay, all right. Yeah, that's about it. Thank you so much, Rob.
Yeah, no worries, man. Does anybody else want to go while we're doing this? If not, that's totally cool too.
Sorry.
Okay. Whoops. Go ahead.
Oh, hi. Basically, I have a question regarding entries on the seconds time frame, because there is a lot of noise in that, but I know that you sometimes use seconds as well as teachers in phantoms and stuff, but I found very confusing when they say, for example, to look for a chalk or a specific interaction between a valid supply and a valid demand, and then you can confirm that you can enter on a retest on S&D flip. So I was wondering whether you could maybe put launch some examples and try to explain what's going on in the chart so that you
Sure.
can. Thanks.
Sure, Matt. So first of all, just before we go into that, are you profitable on the 1 minute entries?
I can consider that I'm pretty confident with my 1 minute entries. I mean, it depends on the setup, Usually, retests of strong high usually are taken on 1 minute, because usually there is are taken on a limit. Sorry, so basically I don't interact. I don't see price acting. When they see, for example, like a different type of setup. There is no. I try to use seconds time frame, or at least there is something that I try to do. I'm looking to learn a little bit more because I see the potential.
Okay, so there's actually a 30-second setup in here. So I ended up being a little bit chintzy today, and I only put a buy order on here. But I seen the 30-second setup in here. For whatever reason, I didn't throw 2 orders on. But long story short, here, hold on. How do I remove this? Here, clear. Perfect. So I'll show you this second setup. Oh, why is that not clearing? Huh. That's odd. I know why. It's trading view. Well, okay. So anyway, there was a setup in here. So you put your supply in here, and then this one was actually clean on the 32nd. And basically, you go down and you look for the same thing you would look for on the 1 minute. It's just more precise. So again, you have your initial reaction point inside the supply, and what took out the reaction point. So to me, there was 2 areas to enter. This was the first, which I wish I put the order in, but I ended up just going off this wick or the bottom half of it, because to me, it seemed like a more probable area. Obviously, it didn't work out for me in this case. But essentially, the seconds is no different than the 1 minute. The only difference is here, hold on, let's go to 15-second. I don't know if I really seen anything today, but we'll just scroll over to yesterday. And like, I don't sit there on the seconds and use it unless I absolutely have to. And okay, so this one here was a good example. So how did so I had to go back and find this trade after, because I actually ended up missing this. I had an order down here. So we'll go sync. No, wrong area completely. Hold on. I think that's more up our alley. It was actually the top half of this wick. Okay, anyway, so this again didn't quite work out like I wanted it to. For me, my entry was sitting here. We didn't end up tapping it. And what ended up happening actually is we tapped into the higher time frame POI. And the way you'd use the seconds is the exact same. So you made a low, you made a high. Now you had this little low, failed to take this low. So you'd look at this as a failed reaction. This ran the failed reaction, and you would get in on this. It's I don't know if you're in Phantom, like some of you would have seen Sketchy took this trade, and I honestly wasn't sitting on the seconds. I didn't take this, but essentially that's how you use it. It's not any different. It's just a little noisier. Like sometimes I'll even wait for a double confirmation entry, where I'll wait for a 1 minute confirmation entry to go, and then I'll wait for something like this where I wait for another supply to go. But like that's all the seconds is. And little advice on the seconds, if you're going to use it, get on the seconds, execute your trade and get off of it. Don't sit on it. Like if you sit on it for like 5-10 minutes, chances are you'll start seeing. I ended up taking this short yesterday. And again, I just took it off this area on the 1 minute, but it would have been the same thing on the seconds. You again came to your POI, swept the highs, swept the lows, and you could probably say something in here caused it because that would be your 1 minute POI. So that's where you could get lost on the seconds. You'll be like, well, this area actually caused it. But then if you actually consider how small this area is, you would probably take it on the 25%. But essentially, that's the exact same thing. Chalk, you had a flip, something in here caused the flip zone. So now if we go back to 1 minute, whoops, perfect. So now if we go back to the 1 minute, it's the exact same thing, right? Chalk, flip, and what caused the flip. And again, you would come back to something in here caused it, so you would get in on it. But the seconds ultimately helps you dissect it. And if you're having trouble with 15 second, just start out with 30 second. 30 seconds, a lot less noise. Like even today's trade that I showed you earlier, it was a lot cleaner on 30 seconds. But that's all the seconds is. Ultimately, your idea needs to come from the same time frame. Like I use 15 and 4 hour, but it's the exact same. You're just gonna find out what actually caused it in here. Or you'll go in here and look for another entry. And sometimes you get a tighter stop, which is why everybody loves it. But if you spend too long on it, you'll honestly take more losses than wins. But if you ever want to investigate what actually took out your reaction point, which I usually try to do, check out the 30 second and the 15. And like I said, start with 30 second, go down to 15, but there's nothing different about it. I think people get scared of it because they take too many hits on it, and people take too many hits on it because they sit too long on it. Like myself, I'll look at the seconds for 30 seconds or a minute, and then I'll mark out my POI. If I decide to execute on it, I do. If I don't, I get off the seconds. I learned my lesson about sitting on the seconds too long. So I hope that kind of makes sense.
Yeah, thank you so much. Thanks a lot.
Yeah, you bet.
I've got another question. If can I ask it?
Yeah, man, go ahead.
All right. So basically, looking at euro dollar like today, for example, maybe I should share my screen because it's even.
Yeah.
Can I?
Yeah. So I'm gonna stop sharing mine. You can share yours.
Okay. So just to better see what I look at. Okay. Can anybody see the chart?
Yeah.
Okay. So basically, this is euro dollar. So
Yeah.
assuming today, when I stared at when I sit at my screen, basically I identified like this POI over here. This is 5 minutes just to put in the context. So I identified this POI here. So I expected that also. I saw this level of inducement like this equal highs. So I expect this broke structure, violent reaction. So basically this was, according to my plan, a value POI that price could have reacted to. But as we saw, basically it was even used as induced for this level of POI, for actually this level of POI, because these are equalized, probably reacted as something around here ideally. Did you identify this as a POI as well, or would you available?
No, I didn't. I actually, so last night I was looking at Tokyo, and what I seen was all this liquidity, and I figured we're either coming down and then going up, or going up and then coming down. And what I look for is, so the drawing I gave you earlier, that's kind of this, and then the range does this. You identify where your liquidity lies and what's likely to top. So even if you scroll to the left a bit, if you look at the way a range forms, essentially you're always you're always running equals. You ran equals with this. You had equals here. You ran it again. You created more equals. You ran it again. And like essentially you just look at all your flat spots. And the market's essentially just going to do this till it takes everything it needs, and then it expands. Ultimately, a range gets wiped 2 to 3 times, and then the real move happens. So anytime I see stuff like this, to me, that's a target. When I see stuff like laying here, to
How
me,
do you,
that's
excuse me, didn't you see that? But here we've got equalized as well, you know, so the, is it,
absolutely.
do you consider it?
I would look to be running those as a bare minimum, but this is, to me, this is the middle of the range. So again,
Okay.
find a target on the top of the range, find a target on the bottom of the range. And if you're buying from here. If you're selling, you're selling from here. But if you could take some sort of level of inducement, so right here, you basically cleared the whole internal range, and then you went up. Here you took the inducement here and you sort of retraced, and then you ended up going a little higher and taking everything, and then obviously NFP hit. But to me, like, I look at the flat spots in the market. So flat spot, flat spot, flat spot, flat spot. The market will continue doing this over and over, and then it'll have the real impulse, and then it'll do this all over again, and then it'll wipe the range. And that's how the market essentially moves. And if you go back and just kind of look at any pair, not just euro, you'll eventually notice that the algorithm's designed to run the highs and run the lows multiple times. Some people call them a stop hunt, but realistically, you know, there's resting orders there, there's stop losses there. The market requires liquidity to move. Where is it going to go get it? Well, all your flat spots have resting liquidity.
Yes.
But yeah, I would have definitely looked at this as some sort of inducement. But if I was targeting a buy, I would be going for these minimum, because generally it'll go from edge to edge.
Yeah, but yeah, to me, this looked like the very good like POI. We see the violent reaction, the break of structure, the inducement, imbalance, everything was there. I expected at least to get some kind of reaction. So, but yeah, probably the overall structure, I missed the overall big picture, right? So that's, we were actually.
You're not wrong. Like, it was definitely a great reaction, but we never just wait for price to bounce in here and take a trade, right? Myself or most people, you wait for it to come into your POI, give you some kind of a flip or a chalk, and trade the reaction. Because, like, I don't know if it's going to react from here, from here, from here, or if it's going to go higher. I just know those are all possible points, and then you trade the reaction. Because if we sat there predicting, being like, well, this is where the aggressive move happened, I should get in here. Sure, you're not wrong, but this is where the aggressive move happened here. Could have you formulated a trade off there? Absolutely. But had you put a trade on this, you would have got wicked out. Mm-hmm. But then if you'd find some sort of trade in here. But you got to trade that reaction. So, like, one of the most asked questions I get is, how do you choose a POI? How do you know which POI to go with? And the truth is, I don't. Nobody does. Like, I had some extra coaching from Sketchy, and I asked him the same question, and his exact answer is, I have no idea, mate. All he has to go off of is 3 POIs up here, you know, whatever, multiple POIs, and multiple POIs somewhere down here. And I'll look at them. What's got inducement? What did something? If you have a POI that made new structure, that's probably a better POI. Even if you go scroll over to the left a bit.
Yep.
A little more. So even look at the way we formed originally here. So no, go back to the right. We'll just go, yeah, that's good right there. So this was a tap into our 4-hour originally. We came in here, we tapped, we broke through this supply, but this whole time I was looking at this, and I was just like, what is that? That's inducement. Well, we came and grabbed this. Well, we still have equal lows here. What did the market do? You created a high, you ran the high, you ran the low, and essentially you ran the high. And then what did the market do now? Run the lows, create some highs, run the lows again, run the highs. So the little schematic I gave you, like, it's not a picture perfect schematic, but essentially that's what the market will do over and over and over. And all you're trying to do is not be the guy that's trading in here. You're trading from here and from here. And like I said, you'll definitely miss trades, but you're going to have higher quality trades if you wait for the edges. And like, do you yourself? So like, when you mark out a POI, do you look for a reaction, or do you more or less use risk entries?
No, I try to look for reaction. Like I
Okay.
don't trust risk entries too much
Yeah,
unless there
that's
is a
good.
very extreme of a setup of a structure which is clearly defined and visible in multiple time frames, ideally M15 and then H1.
Yeah.
Otherwise, I cannot use risk entries. That against my psychology, I would say.
Oh yeah, yeah. I don't know if you actually go dissect, like I told you right here, you had 2 levels of inducement, and the market came down to here. If you actually go dissect this on the 1 minute, it actually went down to the original flip zone. So you can actually always find the Y. So now look at, so now,
Is it
yeah,
is it better like this way?
yeah, enlarge it a little bit.
Enlarge. Okay.
Is that go back to where we were? Is that this right now? Is that the correct date?
This is
No, this
like
is
the
right.
same.
This is right now.
Yeah, this is no. This is the same thing that you were considering. Like
Oh,
this is the
okay.
touch
This
of the
is,
for our POI. Then
yeah,
build the equal high, equal lows, then equal
yeah.
lows again,
Okay,
and then
okay,
start.
okay. It's very squished. You want to make it a little bit bigger for me?
Oh yeah, like is
Very,
it better?
yeah, that's a little better. So right here, took the low, took the high, and you have, where did the move initiate from? I would say this candle. And if you look where it came back to, the market literally came back to where the initial flip happened within the chalk. And try to identify these points. They don't always get tapped, but more often than not, it will come back to what initiated the move and what caused the impulse.
Yeah, makes sense.
Yeah, you bet. Well, I hope that kind of clarifies things and confuses you a little less.
No,
I think,
ideally, like, do you have like, because when you are during the session, sometimes you forget to think about the big picture and you dig too much, on what's going on in the moment without figuring out what's the market has built in the past and what can I, detect the intention of BFIs be. Like, do you have like some mental process? You say, every 30 minutes I stay away from the desk, I go to the big picture and take a look again, what's building in, or some, because some, maybe unless you you detach yourself, like for example, like 5 minutes, I guess, from what you're looking for, what you have been looking at for, I don't know, for 1 hour and stuff. It is difficult to realize here, oh wow, this is building equal lows. Okay, this probably is going to retest down, so probably you look for entry over here or over here, for example. Then you see this level of inducement and you try to buy here, but you get a very bad reaction. But again, you realize that it's equal lows, and then the final POI basically got touched and price moves. Do you have some kind of mental process to avoid making mistakes and bad trades?
no, man, I'm a human being just like you, and I lose my cool just like you. Sometimes, sometimes when I lose my cool, I take my dog outside, or if I just took like a break even at a loss, I'll take like a little 5-minute break. But no, I don't actually know too many traders that have a solution for this. Like even the really good experienced traders, they still have, they know, when you lose your cool and you need a break.
Yeah.
And myself, I might just turn around from the screen and talk to my spouse or take the dog out for like 5 minutes, and usually that cools me off. But going back to your as far as trying to plan what the market does, I never know what the market does. What I do know is that these are all levels of inducement, and every time these levels get hit, there's going to be a violent reaction. I don't know if the reaction is going to follow through. So that's where, if I do get in it, I try to break even before this reaction has a chance to come back and take me out. And essentially, that is all you can do. Because like I can identify every inducement level in the world, all of these flat spots, and they're all going to get hit, but I don't know when. I don't know if it's gonna, I don't know if it's gonna hit this inducement and do this and then come down. I expect the reaction, but I don't know. So again, we're always trading a reaction, and we're always just looking where we could take the trade and why. But as far as losing my cool and all that, like, yeah, I probably lose it just as much as anyone else. I just know when it's time for me to quit trading or look at the screen or walk away. I think that's something that takes years of practice. Like, I've gotten better, but it's definitely not something where you just have a 5-minute talk with somebody and they're like, okay, all better now. I think it just takes time to develop, man. But if you're finding yourself getting lost or like whatever, go outside for a few minutes, go make yourself a cup of coffee or a cup of tea. Like, I promise you, you're not going to miss anything. And if you did, there will be another setup. For the most part, we think if we miss one trade, it's over. And that's, that's the natural human thought process. But then you got to be rational and know that it's not over, because the market's going to continuously move. And if you did have to sit out a session, it's not the end of the world. In my experience, every time I sit there and try to force a trade because I had just taken a couple of losses and I need to make my money back, I end up losing more. So that's where I usually, I have a limit. 3 losses, done. If I lost my cool, I'm done for at least 10-15 minutes. If I don't like the price action or I'm really tired, I'll quit trading. Like, I won't sit there for 6 hours executing every trade, trying to make my money back. That I just know it's not gonna pay in the long run. It's really not your trades that are gonna help you be profitable. It's stopping doing the wrong things that'll help you be profitable, if that makes sense.
Yes, it does. Yes, it does.
All right, well, yeah, I hope that kind of makes sense and not confused
Yes, thank you so
everybody.
much.
Yeah, you bet, man. Does anyone else have anything they want to talk about? Like, I'm here for till 10:45, so that's like another 10-15 minutes or whatever. If not, it's totally cool. But if you guys do, yeah, totally here. This will probably be the last Q&A I do. So if you guys do end up having questions aside from that, you could probably DM me and I will try to get back to you, as long as I don't get too many DMs.
Hey, Rob, I have a question.
Yeah.
Can you, since we have like 10-15 minutes, can you show me an example of like a hedge or maybe something that you took? Just so I can get an idea of how to how you paid it off, like the 10-minute.
I've stopped sharing, by the way. Okay.
Yeah. Well, let's see if we can find one here. So like PA was kind of garbage this week, but I think where were we here? So we're way over here. I might have to redraw some stuff here. Where was it? I think it was hold on. Yeah, I had all this stuff drawn, but I believe this would be our 10-minute. Hold on. Let's actually cycle through here. Yeah, I think I did have that doji pulled. Okay.
So basically, if I understand correctly, you're looking for an entry on the 15-minute and then a hedging opportunity from the 10-minute.
No, I look for a POI in between 10 to 30. So this one specifically, I knew this doji was there on the 10 because I had found it. So sometimes when you look on the 15, you get something like this. So if I cycle through like the 10, 15, 20, and 30, and I find a cleaner POI, I will pull it off whatever time frame. Like, I don't, to me, it makes no difference. Hold on. Let's see. Well, let's go through this one first, and then I'll show you another one I took after, and I think it was off a 30-minute POI. Just try to remember where all this stuff is. Okay, so this one here, pretty straightforward. We didn't have much of an interaction here. And I think this one I ended up finding on the seconds, and ultimately it was this little doji. But you would look at this and you wouldn't be sure if you had a reaction point or not. And that's where I say like the 30-second will kind of clear things up for you. But this was a hedge I framed out myself, and I don't think it ended up working out for me. I think I broke even on this one. So that was one I tried. And this was obviously my good trade here that we had talked about where the initial flip happened. But that's pretty much what I would frame a hedge up like. I would look at it to grab some sort of inducement like this, and then I would try going the other way. And I believe I tried shorting it down to here where I wanted to buy off of, and it didn't work out, which is totally fine. But I had, hold on, just trying to remember where the, I took one off a 30-minute here, and I don't remember what the POI was. Might have, I think it was in here on the 5th. I believe. Well, it wasn't even a hedge. Never mind. That was just a trade I took. Sorry, man. I usually have these drawn, but I end up deleting a bunch of stuff because my chart just starts looking retarded.
Yeah, no problem. But I get the idea.
Yeah,
Yeah.
it's no different hedging than it is anything else. The only difference is if you're going against trend, like you probably won't catch the whole move.
Yeah.
Like this was one I had taken, and I don't think I took it much past like 6 or 7 or 8R or something. But anytime you're hedging, I just go to the nearest supply or demand. Like you wouldn't know to run these highs at the time, right?
Yeah.
But the concept itself stays the exact same. It doesn't matter what direction you go. You have a sort of a reaction point. You have an area like here to get in, and you have your extreme.
Yeah.
It's the exact same thing all over. The POIs is probably the hardest part. And with those, all I could say is cycle through multiple time frames. And if you can get a chalk and a flip, it's usually a good POI, not always. But I always look for a level of inducement to be run. So like this, for example, always looking for these to be run. And then once that's run, you get your V-shaped reaction. That kind of shows you there's some momentum. I don't really know how to explain it because like I don't really look at it as hedging anymore. Like even though that's what it is, I look at how the reaction looks, and if the reaction looks good and if my pricing's proper, I'll take the trade. Like if this hedge happened but it was in premium, I probably wouldn't be looking at it if I'm trying to take it up. You know what I mean?
Yeah. Because for me, like I mainly focus on the 4 hour and the 15-minute, and I don't cycle through like the 10 to 30. But now that I realize, other people are like hitting good trades, I was like, okay, maybe I can back test, and if it works out for me, I can get into that as well. But the 4 hour and 15-minute is working fine for me. Like, I don't have an issue. I'm hitting good R, but I just wanted to like try something different as well and add it into my trading plan if it works out.
Yeah, like the 15 works great. Sometimes you'll just get a better looking POI on like the 20 or the 10 or the 30, and like you never know what it's going to come out better on. Like sometimes you look at an area and it's just a bunch of gross wicks, and then all of a sudden you go to like a 20-minute and you're like, oh, there's 2 clean order blocks.
Yeah, okay.
That's all it is. Like it's nothing different. And hedging's again nothing different. Initial reaction, chalk flip, what caused the reaction point to fail? Cool. What's the backup plan? Where the move initiated? Why would I choose where the move initiated? Well, look at the reaction and the level of inducement. Both of these trades are valid. And usually I put both orders in. I don't know why I hesitated on my 30-second buy today. Would have been nice to take something out of the market, but didn't work out. But yeah, essentially it's the same thing. And this is a prime example of me wanting it to come here And this just didn't work out for me. I ended up breaking even on that. I don't know if anybody's seen my post. I was like adding up all my break evens, and I've actually been losing a lot of hours because I'm either not managing well or I just have too big of expectations. And this is what's been happening for me. A trade will go like 6R, and rather than me taking any profit, it'll come back and take me and completely hit me out. I've had, I think, 3 Tokyo sessions now alone that are up in the high 20 Rs that I was up, and I took 0 off the table. So I don't know what I'm going to do, if I'm just going to start partialing out at any flat spot, or if I'm just going to start, taking partials at 5R just so I know I get paid.
Yeah.
Trying to figure that out, because adding up all my break evens this week, it's pretty sad because you already up that money.
Yeah.
But yeah, essentially a hedge is no different, dude. It's the same thing all over. Chalk flip, and where would you take it and why?
Right. All right. Thank you so much, Rob.
You bet. And does anybody have any last questions here before we get going?
Maybe like I've got another question. This is probably like similar to the one that I've done, but in general, when you see like a decisional POI, so basically not an origin one, so basically one within the leg, a kind of drop based drop or rally based rally, what do you consider to be like a valid like decisional POI? How do you validate like because maybe you could.
So my favorite POIs create new structure. So like this to me is a great POI because it made new structure, taking this high. No, it didn't give us new like market structure, it's more substructure. But again, it did something like this. I know it's probably going to get a decent reaction. But as soon as you get something like this and you create this, again, you've created a level of inducement that's going to get run. To me, so the best POIs will always make a new high, even if it's not a new market structure high, even if it's just substructure, you're always taking highs if we're going up. If we're going down, you're running lows. But you're probably asking why, how do I know if it's this one, or this one? I look at what they did. I look if they swept liquidity. I look if they wiped the range. And then I'll look if they gave me a new high or not. So this, for example, like, yes, you could say it gave us a new high, but the move didn't originate there. The move originated either here or here. Well, how do I know not to use that? Well, your fib alone, at the time, you would have only had something like this. So let me just get rid of a couple of these.
Like Rob, also, for example, taking a look at the bearish leg that actually comes right before that, like in the bearish leg here? No, before. So basically to the left.
This bearish leg.
Yeah, correct. I mean, within there could be like POIs that could create like further reaction to the downside. This price, for example, rallies up. Like within that leg, what for example could be decisional POI. So not at the extreme of the leg, but inside the leg, So basically, what are the ones that you consider like potential creating a trade opportunity, if you consider them at all or only?
Yeah, I get what you're saying. So this is where your 4-hour comes in. You kind of have this is kind of a weird scenario. So I had pulled a fib on this leg, and we had hit 50%. But then I kind of looked at this whole impulse as one move, and I threw that fib on too, which is exactly what NFP actually targeted. So to answer your question, you're always looking to be higher in the leg of the 4-hour area if you want to be moving down. If that kind of helps you pick your POIs, you're always looking at proper pricing. So if I'm looking to sell down, I probably know that any reaction to anything down here is going to be
small.
Yeah, it'll be small, and it'll be for stacked liquidity. Whereas any real move is going to come from something higher. At least that's the thought process. Like, ideally, you want that 50% hit. It doesn't always get hit. I would say 7 out of 10 times, though, it does. But anytime I look at a chart, any POIs that are like in here, I just know it's going to be very small and the real move is going to happen from the higher ones. Again, I don't know which one's going to react. The only thing I can do is go down and look at them and see what they did, what kind of momentum they had. Is their inducement intact? Okay, if the inducement's intact, was there momentum? Great, this one had momentum. Could there be cause to go higher? Sure, this would be the 50% range in mitigation. I always just try to create a story of why I would go higher, if that makes sense. So as soon as I make that story, I kind of feel like these and these start standing out, and you just know that anything off these is going to be minor.
Makes
It always
sense.
it always goes back to your premium and discount pricing. No, it doesn't work every time, but more often than not, proper pricing will get you on the right side of things to make sure you're getting a good deal.
Yeah, because you know, but there sometimes, you know, the another thing comes into the selection of decisional POI. For example, if you have got alternatives, for example, a sequence of dojis, like if we were analyzing on their leg, we might have like imbalances on the higher time frames, even above some POI. So basically, you would say that if prices started moving up, but there is still imbalance on the upside, is it risky, for example, to select 2 down POI? But eventually you could get like price react to the lowest POI, leaving the imbalance above. So basically that's something that that messes you around when you try to select what at the level at which price might react at.
So, like, if I want to be completely honest with you, I don't use imbalance one bit. I don't, to me, imbalance is momentum in the market. So right here, you have a gap, it's imbalance. I don't need to identify it because I had momentum come in the market. This automatically becomes a POI. I can look anywhere in the market and start being like, oh, imbalance, and like you'll drive yourself nuts trying to identify that and using that as your target point. A level of inducement or a pool of liquidity to me is better to focus on. But ultimately, it's market structure and then premium versus demand. That is the two most important things. As far as imbalance, yes, it's there, but what is imbalance actually? Imbalance means there was an impulse in the market. Well, if there was an impulse in the market, chances are that created a good POI. How was that POI created? Let's dissect it. Okay, so if I look at the way this range formed, what do you notice? We had this big candle that engulfed this little guy. What else do you notice? How did this wick form? Well, you took all the liquidity here. So that to me, just for that reason, becomes a valid POI. This would be kind of a mediocre POI. I don't know if it's going to react off it, so I'll pull it. Like I pull all my sell to buy wicks because like I don't know. Oh man, that is not what I meant to do. But yeah, I pull all my sell to buy wicks because like I don't know what's gonna react. So like these sell to buy wicks here held and reacted, right? But ultimately, like I honestly don't know what POI is gonna react. So I pull anything that makes any sense. These sell to buy wicks, you have a mini level of inducement. These sell to buy wicks, mini level of inducement. Do I look at this imbalance? No, I don't, because if there was any momentum and any of these POIs, you know, did anything. So these kind of took these highs, you sort of took the substructure highs. I can start formulating a story that like, okay, chances are one of these three will get a reaction. The lower it comes in the leg, the more comfortable I feel holding longer if I'm trying to go up. So that's all I look at when it comes to a POI. But as far as, you know, imbalance, like if I was to sit there and do this, you'll drive yourself mental. Every third candle has imbalance. I'm more concerned about how the POI was created and if there was any momentum. Again, momentum. You didn't get a sweep of the wick here, which I don't like, but you had momentum. And then if you actually notice where this one came down, it swept this wick and sort of created equal lows. So to me now, if price was to continue down, I would say these equal lows would become a proper target because there is line inducement or liquidity there. But that's all a POI is to me. Like I know the whole imbalance thing works, but like I said, think of it logically. Imbalance just means there was momentum. Buyers took control in this case. Sellers didn't have a chance to interact. Well, there was an impulse. That impulse is going to create a POI. And ultimately, you're going to build a story off that, regardless if the imbalance is there or not, right?
Yeah.
Like I could find you imbalance from a year ago, 2 years ago that hasn't been filled. It's just I don't know when the market's coming there. All I can do is be like, okay, this is a POI. I like the reaction. We had a flip. I'm going to try a trade. I'm going to manage well in case the trade doesn't work. And that's ultimately what trading comes down to. We don't know. We just think that there's a high probability of this and a high probability of that, and we take it. So hopefully that kind of answers your question about imbalance.
Yeah, thank you so much.
You bet. I'm going to get running here, guys. I will get this video up on YouTube later today for anyone that did want to review. Like I said, I won't be doing these anymore. I just have too much stuff to do, and I can't be doing them on Fridays. If you guys do have any more questions, like I said, feel free to shoot them to me. I will try to answer them when I can. And some of you I know come back testing, so I'll see you on Sunday anyway. For the time being, I'm going to keep the back testing going. I don't know when till, but as of right now, I'll keep it going. But yeah, we'll leave it here, guys. Have a good weekend. Thank you for coming out.
Thank you so much for your time.
You bet, guys. See you later.